accounting for non-profit organizations. In this section, we will discuss the accounting system which is applied in the non-for-profit organizations. So, firstly, we must define NPO. The NPO stands for non-for-profit organizations. Definition of NPO. The NPO is an organization that provides assistance or help to individuals or groups rather than generating profits for itself. So, NPO is organization provide assistance to individuals rather than generating profits. So NPO is not a profitable organization. Examples of NPO: first, hospitals, charities, schools, as well as associations for science, arts, and sports. So all of those are examples of NPO organizations or non-for-profit organizations. In most countries, governments are considered a separate type of organization and not considered as a non-profit organization. The second question, or the second topic we will discuss here, is a comparison between commercial organizations and non-profit organizations, or discuss the different features which distinguish the non-profit organization from the commercial organization. We must first define the commercial organizations, as we have defined the non-profit organizations before, and the non-for-profit organization is an organization that provides assistance to individuals rather than generating profits for itself, while the commercial organizations are organizations which aim to achieve profit. So the commercial organizations are profitable organizations. They seek for profit. The differences between commercial organizations and non-for-profit organizations stem from the different reasons for their existence. As the commercial organizations pursue business profit in market transactions and distribute earnings to shareholders, the NPOs pursue public benefits and provide benefits and services. And in most cases, the NPO are exempted from taxes due to their contributions to social needs. This means that the commercial organizations seeks for business profit in the market and distribute the earnings to shareholders, because commercial organizations are profitable organizations, while the NPO are non-for-profit organizations. They seek for public benefits and provide benefits and services. So, in most cases, the NPO are exempted from tax. They will not pay taxes due to their contributions to social needs. So, the differences between commercial organizations and NPO are discussed as follows. We will start by differentiating between the commercial organizations and NPO, or non-for-profit organizations, as follows. We will discuss many characteristics and we will differentiate according to those characteristics between the commercial organizations and NPOs. First, motivation. Motivation for commercial organizations are or is profit earning. Why? Because the commercial organizations are profitable organizations, so they seek for profit. So the motivation for commercial organizations is profit earning, while for NPOs or non-for-profit organizations, the motivation is to provide programs and services that are of public benefit. They seek for the public benefit and not for profit. Second, the ownership. The ownership in case of commercial organizations are partners, shareholders. They are the owners of commercial organizations. While in case of NPO or non-for-profit organization, the ownership are members with no financial benefit. They get no financial benefits. Number 3, management control. The management control in case of commercial organizations are partners, board of directors. They are the managers. They represent the management. While the management control in case of NPO is trustees who are unpaid. Number 4, the capital structure. The capital structure in case of commercial organizations can be through fixed interest loans. They can get loans with fixed interest and equity shares. While the capital structure in case of NPO or non-for-profit organizations are through voluntary funds or donations. Number 5, sources of income. The sources of income in case of commercial organizations can be through first, sales. They can sell a product and get money, so they achieve income or profit. This is the first source. The second source, they can provide a service rather than selling a product, or they can do both. So it's the second source of income in commercial organizations, or through investment. While the source of income or sources of income in case of NPO are through voluntary funds, grants, fees, charges. The performance measurement in case of commercial organizations. The performance can be measured by, in case of commercial organizations, by profitability. The profitability is shown through dividends growth or capital growth. So the growth in capital or the growth in dividends represent profitability. The performance measurement or the performance is measured in case of NPO based on or by the quality. So the last one is planning decision space. The planning decision space in case of commercial organizations are technological improvements, expansion of activity, while in case of NPO, the planning decisions based on expansion or contraction or funding changes. Third, the accounting distinctions between commercial organizations and non-profit organizations, or distinguish between the commercial organizations and non-profit organizations from the accounting point of view. Now we will discuss or differentiate between the commercial organizations and non-profit organizations from the accounting point of view. There are accounting distinctions in 5 significant areas between commercial organizations and non-profit organizations. These accounting distinctions stem from the different objectives of commercial organizations and non-profit organizations. As in the commercial organizations, the objective is to match revenues and costs to measure profitability, because commercial organizations seek for profit. While in NPOs, the objective is accountability for program, activities, and stewardship. The 5 areas are discussed as follows. Number 1. Cash versus accrual accounting. In commercial organizations, the record keeping is always accrual basis, and this means that the accrual basis means that all income and charges relating to a financial year shall be considered or shall be taken into consideration, regardless of date of receipt or payment. So, commercial organizations use accrual basis. What do we mean by accrual basis? This means that all income related to a financial year should be taken into account, regardless of the date of receipt or payment. While in case of NPOs, the cash basis of accounting is used. What do we mean by cash basis of accounting? The cash basis of accounting means that only transactions with cash payment are recorded, but the unpaid bills and any amounts due are ignored. The cash basis means that we must take into consideration only the cash payments, while any unpaid bills are ignored. Then he differentiates between the small NPOs and the large and medium NPOs. The small non-for-profit organizations use the cash basis accounting, while many of the medium and large organizations are using the accrual basis. Some NPOs follow a modified form of accounting, which is a combination of accrual basis and cash basis. So, we have discussed that the small NPOs use cash basis, and the medium and large NPOs use accrual basis. Here, some NPOs follow a modified form of accounting. The modified form of accounting is a combination of accrual basis and cash basis, which make the picture even more complicated and confusing. Some other NPOs keep their records during the year on cash basis, but at the end of the year convert to accrual basis by recording obligations and receivables. So, some NPOs use the cash basis during the year. They record all the cash payments, but at the end of the year they convert the accounting system to accrual basis by recording obligations and receivables. No matter what kind of accounting basis different organizations are using, the important thing is that the records kept are appropriate to their nature and fulfill their needs. Number 2. Fund accounting. The fund accounting is a method of segregating resources into categories, which are funds, to identify both the sources of funds and the use of funds. So the fund accounting is a method of dividing resources into categories. in order to identify both sources of funds and use of funds. The fund accounting was developed to present fairly the financial transactions unique to the non-profit organization. The NPOs have to account for funds received, including certain funds that have been given for use in a particular project. So the NPO must account for all funds received, including funds that have been given for use in a particular project. The requirement for separated accounting for restricted resources to demonstrate accountability is solved by presenting separate financial statements for each fund. And this is the major reason fund accounting is widely used by the non-profit organization. Number 3. Inter-fund transfers and appropriations. Inter-fund transfers and appropriations are also unique to NPOs. By using fund accounting, one relates to use of transfer to allocate resources between funds, and the other to use appropriations to authorize future expenditures of resources for specific resources. Number 4. Treatment of fixed assets. In commercial organizations, fixed assets are always recorded as assets in the balance sheet and are depreciated over their expected useful life. So in commercial organizations, all assets are recorded in the balance sheet and are depreciated over their expected useful life. While in NPOs, the fixed assets are difficult to record and there is no single generally accepted principle or practice to follow. The NPOs has no single generally accepted principle to follow. But some organizations record and report fixed assets and some don't. Some report and record depreciation and some don't. Okay, so the NPOs assets are difficult to record. Although of this difficulty, some organizations record and report fixed assets and some don't. Some report and record depreciation and some don't. Number 5, contributions. The contributions in the commercial organizations is not a usual source of income. But if this amount is legally earned, the company will record it as accounts receivable. While in NPOs, contributions are the principal resource to depend on. It's the main resource to depend on. The main resource, that the NPO depends on. And there could be a wide range of restrictions attached to them, to these contributions. So the contributions should be recorded in the right fund at the right time and with the right restrictions.